There are still, Michael, successful people running companies that swear by gold, that are resentful, that say Bitcoin's fake. And I personally know people that have used their Bitcoin to buy a house or to have a car or to buy things physical. So obviously it's not, but every company's balance sheet right now most of them sit on cash and credit. If they have alternatives, like you talk about, they're holding low risk debt. Obviously those are both crumbling. So when you have conversations with these CEOs and they've seen the gains you've had, they've seen the gains Tesla's had, what is their main concern? Are you almost to a point where you're not trying to explain it anymore because you have so much content out there that explains it, and if they really wanted to learn, they could, but they're stubborn, or what?
Let's rifle through that. Remember I said that sometimes people don't do the rational thing because of inertia? Mm-hmm. Okay, with gold, you have trillions of dollars locked up in macro hedge funds where they just haven't really made a reallocation decision in 3 years or 5 years. Once a year, they might move 5%. You know, I can't find a single person that supports gold that actually has more than 50% of their portfolio invested in it. If you look at my Twitter, I noted that Peter Schiff, who's the most notable gold advocate, just admitted that he only has about 5% of his portfolio invested in gold. 95% is invested in something else. Right? He's just trolling, Bitcoiners just to get their attention or something. I debated Frank Giestra. Frank doesn't have the majority of his assets in gold. A lot of times people that are promoting gold are actually owning gold miners. But gold miners are like gold dealers or gold salespeople. They're actually dumping gold on the market to make a commission off of it. They're short gold. They're not long gold. They want to sell it as opposed to save it or hold it. But why? Because some people just haven't really thought about it. When you ask anybody, why do you have gold? They're like, well, for 5,000 years, it made sense. Well, do you think deeply about it? It stopped making sense 5,000 years ago. If you study the history, gold's always been a myth. Every single society, there's been a layer of fiat currency wrapped around gold, and then there's been a corruption and a debasement, and it's happened 5,000 times. It was happening 4,000 years ago. It was happening in ancient Sumeria. They were crashing the currencies, right? So gold is always just a partial thing. It was the best bearer instrument. But if we go to, and we go look at other reasons, like publicly traded companies. So if you're a public company, if you're Facebook or Apple, you got a lot of cash, but the majority of your market cap is based upon the P&L part of the business. And only the minority of the market cap is based upon the treasury. And in that case, there are impediments that slow people down. One impediment is the accounting treatment for Bitcoin. It's kind of prejudicial to holding it in a public company, because you can write it down, but you can never write it up. So if I bought $500 million of Bitcoin or say I bought $1 billion and it went down by 50% and then went up by a factor of 20, my balance sheet would show that I had 500 million in assets, and my P&L would show that I had a $500 million operating loss. But in truth, at the end of the period, I would have $10 billion in assets and I would have $9 billion in investment gains. So you can see that if you're a CFO and very conservative, if you're not allowed to show the $9 billion investment gain, and if you're not allowed to show that you have $10 billion in assets, right, you would go slowly. So I think that there are certain things like that slow down adoption. We've gone from like nothing to about 36 publicly traded companies that have Bitcoin on their balance sheet. So don't get me wrong, it's going pretty fast, but we're really year one. Maybe we're moving into year two right now. And I think it's a 10-year process. It's like, and I'm not bothered by it. Like if you roll the clock back to 1900 and you invented electricity and you said, okay, how many publicly traded companies have electricity in their factories? Well, it's not like they all adopted electricity in the first 12 months. It took about 10 to 20 years to start to wire factories and ships and buildings and products and appliances with electricity. If you look at those pictures of like New York City in 1905, there's people and horses and carts. In 1915, everybody's got a car. I mean, it took about a decade. And, it moves, but, reasonably 15 years, 20 years sometimes to really change things over. So I think, we're looking at a 10, 15, 20-year time frame, and then some people will move earlier, some will move later. What I say to people is, you don't really want everybody to move too fast, right? Because Bitcoin's going up 170% a year for a decade. It's up 300% in 12 months. If it went any faster, we'd rip the wings off the airplane. Or again, coming back to, I'm an aeronautical engineer. Okay, if you go faster than the speed of sound, you get shock waves. But you might know how many airplanes are designed that fly well below the speed of sound. And now name me a passenger airplane that flies well above the speed of sound. Because the last one was the Concorde. And the Concorde was created in like 1960s, and it flew in the 70s. And here we are 50 years later. And we still don't fly faster the speed of sound, because there's a natural speed at which you can move through the atmosphere. The speed of sound is the speed at which air communicates to each other, that the fluid communicates the passage of the airfoil. And so if you move too fast, you generate sparks and friction. So I think 100% a year is pretty fast. If Bitcoin went up by 1,000% a year, we'd rip the wings off the airplane. And so I'd say these sorts of inertia, like capital structures and corporate structures and slow moving board of directors and accounting standards and the like, and regulatory guidance, it takes time. It's okay. If we fixed all this tomorrow, Bitcoin would be trading at $10 million a coin and you wouldn't be able to afford it. As it is right now, you get to buy it at $0.05 million. And when it's trading at $2 million, you could say, yeah, when I was younger, I did the work, I figured it out, and I took my money and I invested in this thing, and now I'm the beneficiary of it. You kind of want it to be a smooth growth adoption curve. You don't want it to just immediately snap forward. What's the value of digital energy? Well, half of everything, $500 trillion in today's money. Bitcoin's $1 trillion. What's the value of digital gold? Well, more than gold, $20 trillion. What's the value of digital property? Well, more than commercial real estate, which is 100 to 250 trillion dollars. Okay, so if everybody understood it, you wouldn't have any opportunity. The best idea in the world is one where you do the work, you figure out it's going to happen, and everybody else disagrees with you because they're too lazy or they're distracted. That's what you hope for. Like I bought Facebook stock before they came public. I said, well, this is the dominant social network. This is going to be huge. Everybody else said, what's a social network?